Hi there, good afternoon, and you've tuned into ET now. This is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And it was actually seeming to be a better day for the Indian markets, but right now we've given up all of those gains, that all of the recovery that we had made through the course of the trading session. Now we've slipped into the negative territory. As you can see on your screens, 46 points down for the Nifty, testing the 18,300 levels as well. Sensex as well is seeing a decline in today's trading session. What's key to note is that the global markets are playing spoil sport in today's trading session. So you have the European markets that are declining approximately 1% or so. You have the US futures that are declining as well. So far, no deal has been arrived at for the US debt ceiling. So that's also one of the reasons why the global markets are under pressure. Also, the UK CPI inflation had come in much ahead of the estimate, so that's also kind of played a spoil sport. If you look at the broader markets, they are outperforming the benchmark indices right now. They are still holding on to the positive territories. As for the advanced decline ratio, pretty neck to neck as at this point in time. If you look at the list of sectoral losers and gainers, we have metal index today that has snapped the gaining streak. Metal index is the top sectoral loser. 1.3% downtick. PSU banks, realty, all of them are down. And pharma is the only is among the bright spot. 1% uptick coming in for the pharma index. So almost 2 hours left to go for the trading session, Vinny. And let's see which side of the market we end at.
Absolutely. Let's keep an eye. That was the market setup as of now. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, we have Sumeet Mulchhandani joining in with us, while from the research team, we have Harsh as well as Ankita joining in with us. A very good afternoon to all three of you, as well as Cheryl as well. And I'm going to start with the first stock that's in focus. Let's talk about Varun Beverages. Now, yes, not earnings today for Varun Beverages at least, but yes, what is the reason is that they have actually incorporated a wholly owned subsidiary in South Africa. So they will be exploring opportunities in this business for manufacturing and distribution of beverages. Maybe, it's like looking to tap on that opportunity that is there in South Africa, because as a South Africa in the market wise, it's a 1 billion case soft drinks market, while in terms of overall, when you look at the net sales, it's 2.5 billion net sales approximately in terms of South Africa market. Overall, the market size compared to India is 40 to 50% of the Indian size as of now. Now, currently in South Africa market, Coca-Cola is the market leader with the 60% share, while Pepsi just has PepsiCo has a negligible share of almost just 1% in trade over there. When you look at it, the beverage company is the bottler for PepsiCo's South Africa market, and additionally, obviously, beverage company does have its own brand as well for in-house beverage brands, which it bottles as well. For Varun Beverages, what this works out for in the African region, about their African region, they operate currently in Zimbabwe, Zambia, as well as Morocco. They have won a lot of awards for execution in the Africa from PepsiCo business as well. Acquisition of the bottling operations could be something that will drive in terms of value creation for the company. So yes, and they have a track record in terms of that as well. I've taken 1 full minute, but that is why
I exceeded that 1 minute. The way how when a researcher tracks a particular sector is when they will go endlessly.
You could talk for a while about this.
Exactly. I am sure Harsh will also agree to that particular point when talking about banks. But let me take the next counter, and I promise I will not take more than a minute. It's Deepak Nitrite. If you look at the stock, it jumped approximately 10% in today's trading session, hitting a 5-month high, as well as that jump that the stock had seen was much more, the biggest intraday jump in approximately a year or so. The company has said that their unit, Deepak Chem, signs MOU with Gujarat government to invest about 5,000 crore rupees in the next 4 years. They also said the investment to set up projects to make specialty chemicals, phenol as well as acetone in in the state of Gujarat. So on back of that particular development, as you can see, the stock is jumping in trade.
Okay, let's move on and talk about the first stock on the charts. And Sumit, you picked out LG for us, and why is this one making your list? What are the charts indicating for this one now?
Hi, good afternoon both. So, in the last session, in the last week, we can say the LG has given a good breakout, trend line breakout after almost, you can say, September 22. So the stock was sustaining above the levels, and if you see today also and day before yesterday, it has given a good run up. So we are expecting a good upside, as still it is showing the upside moment above the resistance of 531. So if anybody is already holding, so we will advise to just continue. It can be a multi-bagger, and it can give a good return in the next 3 to 6 months. We are expecting the 700 plus levels here also. So if already holding, can trail with the stop loss of 520.
Let's move on and talk about an earnings candidate and Dream folks. Ankita, this one is seeing a nice dream run today, at least in trade. How are the numbers looking like for this one?
Absolutely, Winnie, you said it. It is seeing a dream run, and what a run up it had. It was up 10% in trade. It has eased off the gains. It's now at 4%, but the revenues, if you look at the net profit, it was up 180% on a year-on-year basis. The revenue from operations were up 139% on a year-on-year basis. The EBITDA came in at 33 crores versus 12 crores on a year-on-year basis. The margins were also up. It came in at 14% versus 12% last year. Now, if you look at the results, it was a healthy set of results on a year-on-year basis and as well as on sequential basis. We also had the management come on ET now, and the management said that they should be able to maintain the double-digit margins in the coming years as well. They have distributed some 2.5 million cards for memberships as of today, and they have more than 90% market share for Dream Folks to this date, and that's the reason why Dream Folks is having a dream run, as you mentioned.
Right, and that's all about the earnings of Dream Folks. But let's hear out the management talk about the earnings and where they see the margin trajectory going ahead.
Even if you see our history, we have tried and maintained the margins. So the strategy is also going to be the similar way that, even in the coming years, we will try and maintain our margins in the same manner.
Let's move on and talk about Sudarshan Chemicals. Harsh, how are the numbers looking like for this one? What's the stock currently doing?
Well, yeah, very strong set, Vinny. What we're looking at in terms of the headline numbers is your revenue from operations is up 10% on year-on-year basis. And when I'm looking at it sequentially, is what the real difference is showing up. It's a 30% plus increase when I'm looking at it between Q3 and Q4. And where is that number coming from? But very balanced. We're looking at domestic revenue as well as export revenue gaining good traction, both front, specialty as well as non-specialty. But of course, export revenue really leading the charge, 30% higher on a sequential basis. So that's where the growth is coming from. Well, let's look at EBITDA. EBITDA has also come in much better than expected. We're looking at EBITDA of 85 crore versus the 86 crore same time last year. But when I'm looking at it last quarter, the EBITDA has doubled. And we're looking at margins as well, which have gone up significantly from 7.9%. Margins have gone to 12.5%. So clearly EBITDA margin also reflecting a good trajectory, and we're looking at profit after tax, which is lower on a year-on-year basis, of course, on the back of the higher EBITDA, but on a sequential basis, you can clearly see an uptick. In fact, only 1 crore of PAT in Q3 versus the 33 crore number in Q4. So clearly seeing that improvement, and you can see the impact of that on the stock price, up 13%.
All right, so stock is trading much higher, by about 13%. Sumeet, we know that the stock is trading higher today on back of earnings, but even are the charts indicating a breakout for Sudarshan Chem?
Yes, 100%. So the same trend line breakout was there, but afterwards from last 2 months it was in a consolidation zone, and today it was a gap up plus open low, and still it is sustaining about its previous resistance, that is nearby the 420 and 425 zone. So till the time this zone is sustaining, we are expecting a good upside till the level of 500. So one can accumulate the dips also. Anytime you are getting the dips till the 430 levels accumulate, one can keep a stop loss of 400. Above the 500, you will get a weekly breakout also. And if the weekly breakout is there, we are expecting 580 levels ahead.
Okay, keep an eye out on those levels for Sudarshan Chem. Let's move on and talk about Godrej Consumers. This one is in focus on the back of a brokerage note that has come in from HSBC. They've upgraded the stock to a buy from a previous hold rating. They've said that they're hiking the target price to 1,100 980 rupees per share from previously 960 rupees per share. They believe the significant laggard now is on an upswing. FMCG overall is in a sweet spot as well, and the strategic focus appears apt, and the business has started delivering results. This is actually paving way for a strong trajectory of structural growth for the company, and valuation is not inexpensive but is tenable, and Godrej Consumers appears to have a good risk-reward relationship. That is why they're keeping an eye out on GCPL, as of now up almost 0.5% in trade.
All right, moving on, Sumit, let's talk about RailTel and how is this one looking in the charts, because only the last 3 months the stock has actually started performing pretty well, giving good set of returns. Do you see that sort of trend to continue going ahead, or you think the stock will now take a pause for some time at least?
From last 2-3 sessions, actually, we are observing some momentum in the rail stocks. So here in this chart, we are expecting a flag and pole breakout. If you will see from the levels of 95, the stock has ran till the 125, 126 level. And in today's session also, it tried to sustain above the 126, but as the market is down from the higher levels, there is some profit booking. But we are expecting a good breakout above the level. So we need a closing above the 126 levels. If it able to sustain and close above, we are expecting 137 and 148 levels. Then 115 can act as a stop loss.
All right, let's shift focus now to an earnings candidate, and that's Antony Waste Handling. They actually came up with their numbers earlier today, and if you look at the stock price, it did see a knock of approximately 11% as we speak right now. This definitely is the biggest intraday percentage loss since over a year for the company. They've said that the Q4 consolidated net profit more than halved to about 9.56 crore rupees. That was hurt by higher expenses. If you look at the company's revenue from operations, that rose by about 8% to 203 crore rupees. But the reason of the fact that the consolidated profit actually halved, more than halved on a year-on-year basis, the stock is under immense pressure. As you can see, 11% downtick coming in for Antony Waste.
Let's move on and talk about Polyplex then. Sumit, when you're looking at this, just somewhere around last week, 5 trading sessions back, you look at it, the stock was at 1,600 levels. Now it's come down, trading around that 1,400 levels. At 1,400, would you say it's an attractive buy, or maybe we could see a bit more consolidation on the stock now?
Here 1380 can be a make or break level. So we would just advise, if the 1380 is breaking on the daily closing basis, so we would just advise to exit from the stock, as afterwards we are expecting a round top till the levels of 1220. So keep an eye on the 1380. But if it is able to sustain and retest, then again we are expecting the 200 moving average that was nearby the 1650 levels. So just keep an eye on the level 1380.
Crucial level, or rather make or break level coming in for Polyplex. If it breaks below that, then he Sumit sees downward pressure for the company. So 1380 is what you need to watch out for Polyplex. But Ankita, let's move on. Let's talk about another earnings candidate then, Ashok Leyland. How are the numbers?
Well, Ashok Leyland's numbers, the revenue was in line and it gave a beat on the margin front, and it also gained market share in the trucking and the bus segments, and they also generated cash close to 2,200 crores, and it has now become cash surplus. We also had the management say that the bus demand is expected to see the biggest growth in percentage terms. It is expected to grow by 30% in FY24 on a year-on-year basis. The company is also focused on margin expansion, and they hope to maintain a double-digit margin in FY24 as well, and they're also planning a capex of 500 to 600 crores in FY24. And on the back of that, Nomura has come out with a note on Ashok Leyland. They have maintained a buy rating with a target price of 184 rupees per share. Now, they see that the Q4 EBITDA margin has beaten all the consensus, and they see that the operating leverage and high gross margins will boost the EBITDA margin going forward, and they see further scope of improvement in realization and the commercial vehicle cycle to stay positive for Ashok Leyland. And on the back of that, the stock is in focus today.
Absolutely, that is Ashok Leyland on your screens. The time for a break on this edition of Market Fatafat. But viewers,
welcome back, and you're watching Market Fatafat on ET. Now, let's keep it going with all the stocks that are buzzing in trade. And Sumit, you've picked out on the charts for us Maruti in the last 1 month. When you look at the stock, from those 8,400 levels to 9,300 levels, almost a 10% uptick already that we're seeing. How fast could we reach those 10,000 levels now?
We can say it's a perfect retest candidate. When the stock touches its previous resistance and again start to fly, so it is a perfect retest. So took a support around the 9,000, which was the previous resistance. So we are expecting the fresh upside, which is continuing from last 3 days, and today also it is in the positive momentum. So the next levels can be 9,600 and 9,750, which is a previous high. So complete U bottom recovery. So one can hold with the trailing stop loss of 9140 and can utilize the dips.
Right, moving on, Harsh, let's talk about Dishman Carbogen and how is this one, why is this one in the spotlight?
On the back of results, Cheryl, we're seeing a relatively poor set of numbers coming from the company. What's come in as net revenues come in at 619 crore versus the 569 crore same time last year. So we've seen an increase there. But when I'm looking at EBITDA, also a 10% increase. But when I'm looking at it quarter on quarter is when really the difference is showing. So EBITDA has come in at 830 crore versus a 770 crore number same time last year. But when I'm looking at it on a sequential basis, it was at 1149 crore and margins were at 18% versus the current margins, which are at roughly 13.5%. So while the margins on a year-on-year basis look stable, but on a sequential basis, we've seen quite a sharp fall in terms of that margin number, and which is what is reflecting on the stock price as we speak. What we're also seeing is profit after tax coming in at around 65 crore versus the 89 crore number same time last quarter. So Q3 89 crore and Q4 you can see that dip to 65 crore. On the back of that, there is some level of pressure on the stock building up as well.
Let's move on to stock number 13, and over there we have Uflex. And Sumit, on the charts, what are the indications that we are picking up from here? Because last 1 year, yes, we've seen a correction, 26% downtick around those 420 levels. Is it an attractive buy now?
Last week only we have discussed about some profit booking in this script. So the stock gave a good run from 320 levels till the 450. But if you will check on the previous history of last 2 years, so this zone was acting as a support and now it is a resistance. So 450 to 460 zone. So till the time the freshly it is not sustaining about the 460, we are expecting a downside. And 50 moving average, which is nearby the 390. Currently the stock is trading at 418. So 390 can be a trailing stop loss or make a break area. So keep a watch here.
Okay, let's move on and then talk about Johnson Hitachi. This one is in focus on the back of its numbers as well. When you look at it on a year-on-year basis, we're seeing a fall coming in the numbers, even in terms of the revenues. That's down by 21%. The EBITDA performance, the operating performance overall, when you look at it, that has been weak as well, because EBITDA has come in at 23 crores versus 39 crores last year, which is a downtick of almost 41%. Operating margins or EBITDA margins, as we know it as, that has seen a decline of around, contraction of around 141 basis point on a year-on-year basis, just at 4.3%. And net losses of the company are at 1 crore versus a profit last year of 16 crores. So the company has clearly swinged into a net loss this time versus a profit. The operating performance of the company has been weak as well. And that is why we're seeing the company's stock price is down almost 4.5% in trade.
All right, moving on, let's talk about Balkrishna Industries and how is this one looking on the charts, Sumeet? Because even yesterday we had a technical analyst flag of Balkrishna Industry. So things are looking bright for this one now.
In 2 sessions, it has given almost a 12% run up. So we will just advise to some cool down and utilize the dips. The stock has made in 21 the lifetime high nearby the 2600, and now the weekly breakout is there. So if able to sustain above the levels of 2350, okay, we are expecting the good upside till the levels of 2600 and 3000 levels. So utilize all the dips here. There can be a small resistance nearby the 2500 levels. So just keep a watch here. Above the 2500, it can shoot till 3000.
All right, moving on then, let's talk about Sirma SGS, and that particular stock is in focus in today's trading session. If you look at the stock, it actually saw an uptick of approximately 4%. Right now, it is actually given up some of those gains. Now it's trading higher by about 1.8%. The New Berman Emerging Markets Equity Master Funds bought about 25 lakh shares at a price of around 351.9 rupees per share through an open market transaction on Tuesday. Apart from that, you also had Norges Bank on account of the government pension fund Global bought about 38 lakh shares at a price of 351.9 rupees per share. South Asia Growth Fund Holdings sold about 53 lakh shares yesterday in a block deal, and along with that you also had Sanjeev Narayan, who sold about 15 lakh shares in a block deal. But the fact that you had marquee investment funds actually picking up stake in Sirma SGS, you saw the stock actually trade higher, approximately 4% at day's highest point, but now it's down, it's trading higher by about 1.6%.
Okay, let's move on and talk about Varroc Engineering. Sumeet, how are the charts looking for this one? What should we be expecting in terms of targets over here?
Stock actually is showing the breakout on the daily time frame. Almost all after 1.5 years, it is showing the breakout, trendline breakout, and a resistance breakout also. And yesterday it has given the close above the 200 SMA. So in yesterday's session, it was almost once touched the 10%, but there was some dip. So we would just advise to utilize this dip till the levels of 290. One can keep a stop loss of 278. So upside we are expecting 345 and 373. So the momentum is still positive.
All right, moving on then, Ankita, Dixon Tech, the numbers were good for this particular counter, and what were the takeaways from the management?
That's correct. A good set of numbers coming in from Dixon Technologies, and what is being pegged as the turnaround quarter for the company. We saw some good, healthy numbers. The revenues were up 3.8% on a year-on-year basis. The EBITDA was also up 31% on a year-on-year basis, and the net profit also came up 28% on a year-on-year basis. And even if you look at the management commentary, very positive commentary coming in there. Dixon expects strong revenue growth on account of strengthening the overall demand and the acquisition of new customers, especially in their mobile business. They're saying that the growth will be very aggressive in FY24, and it will be much ahead of the industry growth, and mobile segment will be the trigger for the growth, and they are expecting the revenues for the mobile segment to double in FY24, and it will contribute to more than 50% of their total revenues. Also on the back of that, Goldman Sachs has maintained a neutral call on them, and they have hiked the target price to 3,370 rupees from 3,060 rupees per share. Now they feel that it is a comeback quarter for the company, and the growth is likely to pick up again. They have beaten all the street estimates on many quarters, and the fact that the major beneficiary of the Make in India push across all products, Dixon is going to see positive quarters in the coming time.
Absolutely, a very positive commentary we've seen coming in from Dixon Tech in terms of margins also as well, what they are highlighting, maintaining it at 4.25 to 4.5% in terms of EBITDA margins. Let's move on and talk about Engineers India Limited at stock number 19. And Sumit, the charts for this one, what should we be expecting today? The stock is surely buzzing in trade. Last 1 month also almost a 9% uptick. What is now penciled in for the stock on the charts at least?
Today also it is up by 7 to 8%. You can say this is a follow-up call. In the March 2nd week, we discussed the stock nearby the 77, 78 levels. In the first week of May, again, we discussed the same stock at nearby the levels of 90. So all the targets have achieved today. We can say 103 and 111. These were the two targets. But always booking profit is much more better than looking profit. So we would advise here to book some quantity, 40%, 50%. And rest one can hold with the today's low only, that is around 99 or the 100 on the closing basis. Upside still there is some momentum till the 116 levels also.
All right, that's the take coming in on EIL, and on that note we slip into a break on this edition of Market Fatafat. Stay tuned, more stocks to discuss on the other side, don't go anywhere.